So, hello, and a massive hello to everybody. Hope everybody's having a great weekend wherever you may be, whatever you may be doing. And again, 50 pips in the house, 16th of July, 2017. No trade calls, no recommendations, every response for their own stuff. We here for educational purposes only. So, what's happened? Well, basically, interesting week shaping up. We've got a decent amount of China data out. Then we have, pretty much a fairly busy data calendar, not huge in terms of US data, but really the focus is going to be on Thursday because we've got basically BOJ and ECB on deck, right? So that's really going to be the most interesting thing apart a host of CPIs coming out this week. But again, focus is going to be on, are we going to start to normalize policy? Are we going to get any hints? Blah, 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 blah. Let's see what happens. We'll focus on the charts and the levels. So basically, ES, SPOI. Basically here we've had a very, very strong breakout, right? I think as we said, as long as we had this correction, right, and we hadn't taken out these highs, you had something to short against, right? Now that we've taken out those highs, as long as we hold above, there's very little reason to get short, right? So up to here, clearly this is a beautiful chart for the longs because we're just holding an upside rotation. All the dips are shallow. They're being held inside this 50 and this 100 DMA. So there's really no reason to worry. Even if we'd come back into the 200 for the trend followers, there's really no reason to worry. Now, what we've been saying is that it's been so long since we've had a healthy correction, at the first chance of weakness, we're more than happy to try and play for a little bit of a correction. That's all, right? Don't make it harder than it should be. Right here, the way everything's closed on extremes, right, at highs, at lows on Friday, so you'd expect to see a little bit more follow through. So here, really, if you're long, you're sitting pretty. And again, any move back into the moving averages, any move back into higher dips is buy the dip. Why make it harder and keep on going for the moon? Buy. This is never going down. And if you're looking to get short, most likely you need to see something to get short against, right? You can't just blindly short into strength, especially not in what we likely see as, these summer slow chops, grind higher, levitation mode, whatever. So what that means is you have to really wait to see some kind of move back below a breakout zone, and then you've got something to get short off for a retracement. But unless you see that, there's very little to do. Now, again, I know a lot of people are going to be saying this is a BS move. Look at all these breakouts on lower and lower volume. Hey, it is what it is. If price prints, it's real. It doesn't matter if it's on one contract, 1 million, or a bazillion contracts. It prints, it's real. So, just have to deal with it. Same on the Dow, right? So basically, there's really no reason to try and stay short here. Same discussion as the SPX, SPY, ES. Now we've got not one man standing, we've got two men standing, right? And that's basically the Nasdaq and the Russell, right? IWM, QQQs. So here, as we said, this is for us our prime candidate to the short side and what makes the most sense. Again, not to go into detail, we've discussed it. We felt something broke here when you had those flash crashes on mini flash crashes on Amazon, etc. And we thought that that was the sign it was time to get aggressively short. Clearly here, we would be lying if we said we're sitting pretty on the shorts when we've retraced 100% of the move down, right? There's no way to, there's no other way to spin this. This is not bearish, right? Newsflash, this is not bearish action. Now, does it mean that these highs have to break? Absolutely not, but it ain't looking good. So still, we're very focused in this area to see how we behave here. We still fear there's opportunities to try and get short against something, especially if we trade back below here using this as stops for the bigger correction. But again, if it shapes up, if it takes out those highs, just like the ES and the Dow, there's very little to do. Here, not doing much. IWM, same thing. We'll have to see how this trades, but it could be violent both sides when you've got so much consolidation here, but that's pretty much where we stand. I wish I could make it more interesting than it is, but that's pretty much where we stand. GC, what's going on gold? So we've been talking about this on the blog for a long time. We're more than happy buying dips in gold. We're buyers of gold, buyers of ZBs, of bonds, even though we prefer to express the gold view by being short yen. sorry, by short USD JPY, so long yen. But here, the way this is trading, again, we got a healthy bounce, but remember, if you're looking at this in terms of a fib, we consider these fibs to be much lower odds, because for us, this is where the move had to trigger strong to, right? It front run the 50 back, it failed here, so we don't look at this as a fib. For us, this is just the support or resistance. It's no longer a way to look at a continuation. So we would not be surprised if we see a lot of wheeling and dealing, more selling coming in here, and we actually probe lower before we end up going higher. But again, very choppy area, not enamored here with any kind of position. Bonds, I don't know if this is us talking our own book, because that's the way we played it. But here, it feels like a lot of people were caught to the long side, off guard, or offsides, and we're looking for an opportunity to get out of that, of the longs, right? And here we were talking about all this opportunity here as a nice little long opportunity. So that was a nice entry. But after seeing this action on Friday, for us, this is sideways flat now. We've taken everything off, and it looks like it may needs to probe lower, even if it's going to go higher. So we're completely neutral on this, completely neutral on gold. We'll have to see what happens. Now, again, a lot of these views are going to be driven by your philosophy, your religion, your interpretation of the DXY chart, right? Your view of Yellen and co. So we'll have to see. But here, basically, when we see things close the way they closed, you would, if you were a betting man or betting woman, you would have to expect that even if this reverses higher, it's going to probe a little bit lower first, right? These are heavy closes. So here, it still looks like we meet. Again, the healthy move would be some kind of a correction, but this is extremely bearish. I think here, if you're structurally long from a bigger term perspective, you're not too worried. You kind of, I'm not going to say you're happy about the trade, but you have no problem as long as this doesn't trade back below the 91s, 92s, right? As long as it holds this, the 200 on the weekly, you could be looking at this, you could spin this, with your whatever fund EV, as it's still okay. If it lets go, then that gets very, very ugly. Here, we still think there's some more downside to go. We suspect, even though a rally would be healthy, rallies to get sold for a little bit more downside before we actually end up going up, even though it's very heavy. Now, of course, most people are going to say, careful, careful, careful here, because where the lows were overstretched. It's the same thing on Aussie. Aussie's trading at high, it's overbought. This is trading at lows, it's oversold. We don't believe in overbought, oversold. So here we just think the way this is trading, the classical way is that even if it goes up, it needs to clear stops from fortune, lottery ticket, fortune cookie stops from Friday, right? So we'll have to see what happens, but if it keeps on holding this breakdown zones, it trades very heavy. It's very hard to call for a rebound or strength unless you see this trading back above the 95.80s, 96s here. And that takes us to, where does that take us? That takes us to some of the currencies, right? So basically, and again, you'll see me switch to the weeklies, right? And CAD, very, very heavy. And what we said is here, if it goes through that 128 on the rate decision, it's just the pain trade. It's just in seek and destroy mode, right? It's looking for stops. So it looks like as long as it doesn't regain the 128, 125s are calling, right? Now, is this extreme? Sure. Is it stretched? Sure. But, things can remain irrational longer than you can stay solvent. So if you flip back on a weekly here, you see it's the same as that dollar, right? As that DXY, you've got that 200. So I think those are the key big levels to keep an eye out for. Here, in terms of shorter term, a bounce would be healthy, but as long as we don't trade back above the 128, this continues to stay heavy. Above the 128, there could be some nice opportunities to try and trade this to the upside, maybe into the 130, but as long as it's below, you expect this to trade fairly heavy. Kiwi here, we're still stuck. Again, if you look at this on the weekly, you see how it's tricky in the sense that a lot of people are going to say That's it. This is a false break. Look at this weekly close. This is uber bullish. This is holding. Buy, buy, buy. This has to break higher, right? The way we're looking at this, it's very, very choppy. You've got all these offers that we're protecting here, and you've got this 200 that's coming down. So we think this is a major chop zone where you could easily get in trouble. So we think the way it closes, there's probably some more upside. But again, we would, if we had to flip structurally long here, the way we look at the market, we'd much rather pay up with a wider stop and wait for a break and buy a retest for the next move higher than try and aggressively get long when you've got this 200 coming into and you're coming into this strong resistance zone. It doesn't mean it's not that it doesn't look bullish. It's not that it doesn't look like it wants to break higher. It's just the location is not ideal for us to get excited on a breakout. And it's a similar discussion on Aussie, right? Does this look bullish? You bet, right? Is this sure? I mean, it looks like this wants to finish this whole wave here and just rip much higher. Could even come into the 90s, right? The issue is that, you know, you've got that 200 just at the 80s. So again, we'd much rather pay up and wait to get it through resistance and use that resistance support than try and get long into what we call a brick wall or into, right? So, but does it look like it has some more downside? Sure. So this is a classical example that this is not cheap enough for us to get long, but it's not expensive enough for us to get short yet, right? And similar on Kiwi. That's the kind of discussion. And yen, you know, we're very aggressive on the short side here, and we've been talking about 112s attracting, right? Now, this is very choppy. This is also a little bit led by our views on equities, but again, this is trade and play for us, and we're still looking for these 112s to come into play. Now, if you look at it from a bigger picture, it's very, very messy. And here we'll just have to see how this trades. But you see, especially on the daily, look, this is why we talk about that 112. It's got a date with a 112, but it's a key level. Look at all these moving averages. You've got the 50, you've got the 100, you've got the 200. So this is the level to watch for the week. We bounce here, that would be normal. This could still try and hold a messy upside rotation. We let go, then we think this is game on for much, much lower, which ties in with the other views. Now, you know, the other big thing a lot of people are going to be discussing is at what point, right, does this dollar weakness maybe flip on big risk off? If that happens, we'll just have to wait and see. For now, we much prefer to just focus on the levels and the charts. And one more, because we mentioned this, I got a lot of questions on this. So GBP JPY. And basically here, this looks like, as far as we're concerned, a lot of people asking us, what is the best way? So writing in saying, want to get short sterling, wants to get short GBP, what's the best way? What's the nicest RR play? What's the cleanest play to try and get short GBP? And in our opinion, the most asymmetric risk reward, the tightest play also in terms of chart location, etc., is on GBP JPY. Now, it's not an awesome chart. It's not an AAA chart, but to us it feels, it looks like it's the location is nice, the asymmetry is nice, the resistance is nice. It also plays into yen strength. If we see that USD JPY rolling, it plays into risk off if you see a little bit of weakness coming in on the equities. So it doesn't mean it has to work, but in terms of location, it's fairly nice location. So that's why we've been looking at this chart. And again, as long as we don't get a day close back above these highs, right? You know, there's a lot of protection coming in ahead of these, you know, 148.50s into the 150.00. But as long as you don't get the day close or a week close above this level, we think that this offers nice asymmetry, or at least this is a chart that's on our radar. Okay, so again, I hope that was useful, guys. Thank you so much for following. Thank you so much for sharing. Thank you so much for liking. Thank you for the banter on Twitter. Again, heads up, I think it could be a very interesting couple of weeks or months ahead. It's tricky because a lot of people don't want to get aggressive in these summer flows. You can get a lot of grind higher or grind lowers in low liquidity overnight sessions. So it's really tricky to read. But again, if we had to take a bet, and again, we love taking calculated bets, right? Especially with the VIX trading down here, we would suspect that give it maximum by midweek, give it a couple of days, 3 days, something like that, much higher chance that you see the VIX hit, somewhere around 12, 13, 14, then you see it close sub 9, right? Have an awesome one. Thank you so much, guys. Take care. Bye-bye.